Hi, everybody. I'm Kyle Ellicott. Welcome back to another edition of VCTV. We're here to continue our ongoing conversations as we do every single day about the latest in various markets and technologies, not just the technologies themselves, but technologies that are driving these various marketplaces. Well, today, we're going to continue our discussion around fintech and blockchain, along with everything in between. And I'm joined very excitedly with Alex, the co-founder of blockchain at UCLA, who is going to give us a full presentation and keynote discussion as to what's happening in this ever-changing world of blockchain. Alex, welcome to the show.
Kyle, it's a pleasure. Can you hear me?
Loud and clear.
Oh, fantastic. I had some initial issues with Zoom, but I think now it's all working.
No
Fantastic.
worries.
Thanks so much for having me. It's always a pleasure to participate in this event. I know personally some of the previous panelists. Tony, if you're still on the line, great to see you. Look forward to seeing you in Asia next time planes are allowed to fly across the ocean. But yeah, my name is Alex Nascimento, and like you mentioned, I co-founded the blockchain lab at UCLA, which today is a student-led organization with over 400 students. It's named Blockchain at UCLA, as it was also a sister group of the original blockchain at Berkeley, which now has spawned all over the country. I have been teaching at UCLA for a little bit over a decade now, always in tech and strategy. And then in 2017, UCLA decided to put an effort out, as it is a school that was quintessential in the development of the internet. And therefore, we thought it was crucial for us to also have a curriculum. Just to give people here a context, as we started in 2017 teaching blockchain business applications, which were a strict business course, no technical requirements or technical knowledge needed to take the class, just demystifying blockchain for law students, liberal arts students, business students, and even computer science students. We evolved, as a lot of the people here know, into the ICO age of 2016, 17, 18. And for the longest time, as faculty and also as an institutional investor, we saw that a lot of the issues with the ICO market were revolving around unregulated securities offering, right? And for those of you who are not familiar with the term, a securities offering in the eyes of the SEC, which is the regulating body in the United States, is anything that resembles an investment contract. So if I give you money with the expectation of making money back, in the eyes of the SEC, that's a security, right? You might like it, you might not like it, you might agree, you might disagree. A lot of the people here in Silicon Beach, down in Santa Monica, Venice, and Marina del Rey, which spawn a lot of what has been done in blockchain, are completely against that vision, but that's the law. And then at UCLA, we obviously take a very institutional approach to this. And then we started researching how to do these token offerings from a regulated point of view. So two things sprung out of that. One is the research we have done. The second is a book we wrote called the STO, The Financial Revolution, which I'll leave a link here. You can find it on Amazon. It's only 99 cents. All the money goes back to UCLA. And I'm also going to leave a link for those of you who would like to get it for free at the end of the presentation. But the important thing, and a lot of what this book covers, is that regulation around the world, including the United States, has evolving a lot into allowing entrepreneurs like the people who are listening to this to create a token offering similar to a past ICO from a regulated point of view and be fully compliant with the law, right? And why is that important? Just to close that kind of like initial context. That's important because one single reason. For Bitcoin, for crypto, for any other digital asset play to really catch wide adoption, we need institutional players in it, right? We need banks, we need broker dealers, we need custodians, we need transfer agents, we need the whole financial industry to adapt this new form of asset class. And this is only going to happen if it is within the guardrails of the law. And as I go around, well, pre-COVID, now I'm only staying here in my office. But as I go around, or as I went around the world talking about this, people would ask me why everybody kind of like sits and wait until the SEC says yay or nay, right? And that's a very simple reason. The U.S. market commands about 40% of the global trades of equity and bonds. If you are a private equity, a VC firm, a bank, a wealth management advisor, like any institutional player in the ecosystem of the world, you want to participate in that 40% of the market. So therefore, you're looking at the SEC to see, are these guys going to shut down this industry and this asset class, or they're going to let it rise, right? And that's a little bit about what I'm going to talk here today is how can you do this? How can you raise money on the blockchain via a token offering from a regulated perspective? You don't need to be compliant with the SEC if you're not going to sell your token to U.S. Investors. But if you want to sell to U.S. investors, I'm going to show you how. And it's not only in the U.S. There are friendly regulations in Cayman, in Singapore, in Thailand, in the UK, all over the world. This is really real. So let me just go here to my application here. Sure.
As you're pulling that up, to everyone at home watching, as Alex said, he'll drop us a link and we'll make sure that gets out onto the comment section of the stream afterwards. So do not fear. We'll make sure that everyone sees that. All right, Alex, we can see your screen. I know you're about to put in presentation mode, but it's all you.
Okay, fantastic. Okay, I hope you guys see the screen.
Yep.
Let me do file, view, full screen mode. Should that be it? Okay, is it in full screen? I guess it is.
It looks like it's might be delayed, but it looks like it's we can see the slide, not in full screen mode, but we can see the full slide.
Okay. So let me just remove from full screen mode so that it doesn't go into too much of a delay. But here, so here's what we're going to talk about, right? I'm sure that a lot of people here know how smart contracts work, but this is me again. You know, aside from teaching at UCLA, I run this investment and blockchain advisory firm called 7cc Blockchain Investments out of here, Santa Monica, California. So this is the book. You can get it for free here at the STOfinancialrevolution.com, and you can use the promo code STObook-Latoken, Latoken, and you can get it for free, or you can go on Amazon and get it for $1. On my private side, we work with a lot of security token offerings, which are, again, regulated ICOs or regulated token offerings. We provide education and research, and we advise companies in this space. Little disclaimer that my legal counsel makes me do all the time. I'm not a lawyer. This is not legal advice. Go get your own lawyer. You need one. A good securities lawyer, please. So what is the deal with this being a potential for the whole industry, right? As we all know, in the blockchain space, you can create these single immutable files, files that cannot be duplicated, or files that, in essence, are a single representation of that unique code. So if you mirror that into the financial world, I can create a contract where you own a share, or you own a dividend, or you own a swap or receivable, any kind of investment contract, I can create in that single immutable file. And then the owner of that token, of that file, is the person that is going to receive the benefits of that investment contract. So that's why the blockchain is so revolutionary for all financial institutions, because you can significantly automate your entire paperwork process, which most banks spend billions of dollars doing so for back office costs. Like Goldman Sachs a few years ago released a research saying that they spent about $10 billion a year, uh, billion with a B, on back office costs. So this is a big deal, right? For those of you who don't know how a smart contract works, but they are software uh, automation processes that self-execute the clauses of a traditional contract. So in the purchase of a home, I would find a seller and a buyer of a home. Those two people would sign into a digital contract. That contract would self-execute the transfer of money and the transfer of the deed, and also updated with the local um, courthouse, and do the clearing and settlement in an automated form. Today, you need all these middlemen to do that in paper and pen, and that's why you keep hearing that blockchain eliminates the intermediary, because all the work that's being done by a middleman could be done by a smart contract or by a computer. Right? So, like I said, in 2000 and late 2017, early 2018, to be very precisely, first quarter of 2018, the SEC dropped the hammer on all these ICOs, or initial coin offerings, that were selling utility tokens on the web, and said, "Oh, if you're selling this to an American, or marketing, or worse, marketing it to an American, you are committing securities fraud." Right? And just for the people here who are not so familiar with the blockchain and crypto industry, a utility token was all these coin offerings that promised a token that you could have access to a new blockchain platform. And a security token, in the eyes of the SEC, should be anything that resembles or reflects an investment contract, right? And if it's an investment contract, then it should be subject to federal regulations. Uh, so the metaphor I like to use here is, for those of you who are a little bit old enough and remember Disney dollars. Disney dollars were utility tokens, right? They could only be used at the Disney parks, and it would give you access to the roller coaster, to buying hamburgers, to taking a photo with Mickey and Minnie, and all these fun stuff that the park allowed you to have access to. And then the security token, and the flip side would be, can I buy some Disney stock? Right? Can I be a shareholder on the Walt Disney Company? And that's the clear distinction here of what we see utility tokens versus security tokens. If we go to a book definition, right, a security is a fungible, negotiable financial instrument with some type of monetary value and rights to ownership. So if you think about that, it's purely like any kind of investment contract. And the SEC doesn't have like one test. It has like a handful of tests, which you would have a really hard time trying to fit any kind of swap contract. The swap, I mean, like, I give you something and I expect something in return. Aside from like just having access to a platform, that would not be considered a security. And that was a lot of what we saw early on um, from the market, and the reason why we dedicated all our resources to researching security tokens and how this would significantly impact the financial industry. So a security token works seamlessly like this, right? A company, that being a small, medium enterprise, a large corporation, a publicly traded, or even a startup, right? Let's use here your local pizzeria example, right? Your local pizzeria wants to expand and open new shops across town. That local pizzeria could issue a token, right? Number one there, and those tokens could be representing shared ownership or voting rights into the governance of the pizzeria chain, or dividends, right? So then you would market and sell these tokens, just like it happened in the ICO days, to investors that would purchase these tokens around the world. Every transaction would be recorded on a blockchain. You would know who your token holders are and who do they sell it to, if they want to transfer it, if they want to sell it on the secondary market. And then the company would automatically determine the dividends and the payments through these smart contracts that would be paid out to all the token holders, right? And that's the beauty of it here, because if you have 5, 6, 10 pizzerias, you don't have scale enough to run this back office, to hire people, to hire accountants that are going to make these contracts, that are going to keep your cap table. Like now you have 5,000 shareholders who all invested $50. Like there's no way you're going to be able to finance a back office for 5,000 shareholders with 5 pizzerias. But with smart contracts and security tokens, you potentially could. So some of the things that we've been, as a company, advising clients into tokenizing into security tokens and offering these in multiple platforms that are available around the world are real estate. Real estate is a really low-hanging fruit, one of the first cases to come out in the security token market. Some of the people here might be familiar with the tokenization of the Ritz Hotel in Aspen, very prime real estate. There has been another handful of deals in the real estate business, because traditionally what really works for security assets or security tokens are assets that are traditionally very illiquid or high cost of entrance, like real estate, right? How are you going to manage like the fractionalization of a office building in downtown Santa Monica between 5,000 clients? You're not, right? On pen and paper, you're going to have to find 10 clients that put up the money. But if you could fractionalize it through an STO, you could offer to the retail investors who could put up $100, $1,000, $500 each month. Startups are another one, and a next step into what happened in the ICO stage. You can now raise money for your startup via STOs. Mature companies can do that, right? You don't need to be a small company. Energy, we've been working with different energy plants that tokenize their future energy production. There are more exotic funds that are playing with art. I know a very well-known fund here in the LA market. They're based in LA, Wave Financial. Great guys over there. Shout out to Ben Tsai, the president, who's doing a fantastic work. Tom Lombardi also teaches at Pepperdine. They're doing a tokenization of a whiskey fund. So you can buy barrels of whiskey, tokenize it, and fractionalize it, right? Funds like limited partnership into real estate, into venture capital, into healthcare, all these different funds could be tokenized. Here is a very important slide, and if you're going to screenshot anything, I would screenshot this. Why? Because in the ICO days, it was very simple, right? You created a website, you created a marketing campaign, you went viral, you sold tokens, you received Bitcoin, you call it a day, and you went back, hopefully, to develop your platform with all the money you raised. Now, because security tokens are a different animal, they are regulated. They need to follow the same parameters as traditional securities, right? They need to have the players and the infrastructure that the current ecosystem requires from institutional grade products or regulated products. Right? So a couple of here highlight notes on this. First, you need a custodian, right, to hold or to mitigate that third-party risk of holding the security. So some of the custody solutions that are available in the market, Prime Trust is a great one. BitGo is another one. Coinbase also does it. Then you need someone that's going to create that token or essentially get what would be in a paper and pen contract and transform it into a file, a single immutable file on the blockchain. Polymath is a big supporter of our book, does a fantastic work, has an entire infrastructure of creating these security token files and contracts. Highly recommend checking out their ERC 1400 protocol, which is on the Ethereum network, and their new product called Polymesh, which is just fantastic from a tech point of view. You're also going to need broker dealers because in the United States, you need to have a license to sell securities. So one of the things I used to do in 2017 is to go around conferences where I saw a lot of my students and these youngsters were doing bounties. And for those of you who remember bounty programs, where yeah, you promote my token offering and I'll give you a kickback, a commission, right? You can't do that. That's in the US, that's straight up securities fraud. You need a license to sell securities to the general public or to promote them. And therefore, you need to find some broker dealers. Coinbase is one. Propeller, who became Atomic, is another one. Then you also need good legal services to provide all these documents and all the paperwork and to validate all your marketing material. Fisher and Broyles, Mark Byron, Adam Attinger from Fisher and Broyles are one of the best in class in the industry. Highly recommend checking them out. Happy to make an introduction if anyone is looking for a securities lawyer or corporate lawyer. These guys are some of the best. Then you're going to have to list your token on a trading platform so that you have the ability to trade. There are a series of trading platforms popping all over the world. We've been checking them extensively. We have a relationship with the most important ones. Our goal as a company is to help clients do cross-border transactions of security tokens. T0 is, in my eyes, Saum and Solomon from T0 are probably going to be the biggest trading platform in the United States. They already account for more than half of the volume in the United States, and they're poised to continually to grow. And then you have KYC and verification of investors, KYC AML services, which are required for you to transact, right? NatKey, Verify Investor are some of the players in that space. So you need this ecosystem and you need these service providers to help you issue a regulated securities. And what are some of the benefits of these of issuing a security token, right? Cost reduction, much faster settlement and automated compliance. You technically are scratching all the costs of your back office. You could do automated revenue sharing and dividend payment. This really shocks people when I go to foreign countries and I tell, well, everyone here knows that the US is all built on small businesses, right? And obviously large corporations. But there's only about 3,000 companies in the entire United States that pay dividends to their shareholders. And why is that? That's because it costs a lot of money and it's a lot of paperwork to pay dividends, especially if you're going to pay dividends on a quarterly basis. Like every 3 months, you have to run all these numbers again, send checks to everyone, make payments, make sure that you're sending it to the right place. It's a mountain of work and a mountain of paperwork. And this all can be automated through security tokens. Startup fundraising can be done through security tokens, can be done through equity crowdfunding, and as well as providing token holders with a much lower risk of redemption, right? So now I'm a member of Tech Coast Angels, which is probably the largest angel investment group in the US here in Southern California. Originally, if you invest in a startup and you want to get out of that investment, you need to find someone else who's going to buy your shares, right? And that's not necessarily liquid. Or if you are part of a fund, then you're going to probably be penalized with a lot of fees by doing early redemptions, and um, you're going to have an issue with talking to your general partners. But security tokens allow you to have the secondary market, right, where you could trade security tokens. Remember, again, these are all single immutable files. So I could sell my single immutable file that is the representation of a chain of 5 pizzerias on a secondary exchange market to someone in New York who I've never met before. And that's the advantage of secondary liquidity. You obviously have 24/7 markets, just like you have crypto, and it extremely facilitates the transfer of ownership, knowing who is the owner of that token. As we progress, and I mentioned that some of the markets are evolving. Obviously, the U.S. keeps being the leader because of its high market share of the general equities and bond market, the entire world. But important markets like Japan recently issued new regulation for security tokens. Singapore, Hong Kong, the European Union. The European Union is a country by country specific. Switzerland, they have 3 different types of tokens, which one could be considered a security under securities law. Cayman considered both securities and utility tokens as just a token. So we do a lot of work for our clients setting up in Cayman or in Singapore. So this is clearly evolving around the world, and it's a new movement. Right. A little bit of the historical fact that I mentioned is that in July 2017 we had the Dow scandal, and the SEC didn't really like that. And then the SEC went after the Munchie ICO and created the Munchie test. Then things started to develop, right? When Bitcoin in 2018 was considered a commodity because it was so decentralized, it will fall technically outside the Howey test. Then the SEC dropped the hammer on other ICOs, including Paragon and AirFox and Kick. But then everybody was kind of waiting 2018, including myself, and is securities tokens going to be a thing? And waiting for the SEC to make an announcement. And the interesting part here, and this is a segue into another part of our conversation, is that in July 2019, the SEC not only approved one, but approved 2 public token offerings. This means you could sell a token to anywhere to anyone in the U.S., right? Regardless of them being an accredited or a retail investor with small check size or big check size. And then it continued to evolve the industry, as in November 2019, Ethereum was classified as a commodity, but then if it would move to proof of stake, it could be potential security. And then Polymath released their Polymash white paper, which is an advent into creating this unique one standard of token for the security token world. There's a lot of problems and opportunities in the space, but again, just to remind everyone, there's still lack of liquidity as the market is in its infancy stage. So we need more STO issuing platforms and a common standard. But if we think about it, we have 70 trillion in global equities, 92 trillion in bonds, and 4.1 billion people in the internet, right? So this is a revolution from a point of allowing these 4.1 billion people to have access to investment opportunities, especially in a market of decreasing interest rates. If you don't believe me, here are a few of the news. T0 is opening their platform to the wider audience, becoming one of the biggest trading platforms in the world. Liquify joins Amazon Web Services to provide real asset tokenization. Yesterday, I just read that Vanguard, one of the most well-respected wealth management firms in the world, is creating their own asset-backed security token platform. The Brazilian bank BTG Pactual, who's a big supporter of our book and a big contributor to the space, plans to tokenize $1 billion in partnerships. There is definitely a wide variety of movement of institutional players into the space. And here's just a little bit of a timeline. We saw in February 2019, investment banks like Julius Baer supporting crypto clients. We just saw JP Morgan Chase, who initially said that Bitcoin was a joke, not to use another word, onboarding Coinbase and Gemini as clients. The Chicago Mercantile Exchange futures contracts for Bitcoin has surpassed the daily volume of trade of Bitcoin. So people are betting in its future, which significantly decreases volatility. Fidelity Digital Assets, one of the biggest players in the space, has been working on their product, institutional grade product, since 2014. Pension funds are investing in this. Backed, which is a solution for cryptocurrencies created by the New York Stock Exchange, is in full-fledged offering. NASDAQ has a security token 0 to 100 platform. Silvergate Bank, which is a crypto-friendly bank, is now traded on the New York Exchange. And foundations like the Tesla Foundations are given grants of $37 million to develop the ecosystem. Just in lack of time here, I'm going to jump into the meat of this here, which is if you want to issue a security token in the U.S., right? And I think this is really like a great crucial point of this presentation. So in the U.S., during the Obama administration, there was the amendment called the Jobs Act. And I joke that with my students at UCLA that it has nothing to do with Steve Jobs. It stands for Jumpstart of Our Business, startups. And it was an amendment that was done by the Obama administration in order to facilitate for entrepreneurs to fundraise or to create securities with less bureaucracy, less paperwork, right? And if you follow these three exemptions, and an exemption means like you need less paperwork, less bureaucracy, you could issue a security or a tokenized security compliant with the Securities Exchange Commission of the United States. All right, the first one is regulation crowdfunding, or well known as Reg CF, right? Most last bureaucratic one. You can issue today up to $1,070,000 every 12 months in this kind of regulatory framework, or your token and within this exemption. The good news is that the SEC is currently reviewing to uptick that to 5 million, and that's going to be a game changer. Because if you're going to do a crowdfunding campaign and you're only going to raise $1 million is money, but it's not like significant for you to make a dent in the industry or for you to scale your startup. But 5 million is a much better number to work with, right? And you could raise that every 12 months. Then you have Regulation D, which falls into Regulation D 506C or B. Those are two variations. That's the most flexible one, but the inflexibility there is that you can only raise money from accredited investors, right? And then there's a lockup period of 12 months where these investors need to hold your token before they sell it to
To
anybody
jump
else.
in quick, just wanted to give you a heads up. We got about 2 minutes until we have to wrap.
Well,
So I
let's
was
wrap
give
up
you
with Regulation A, which is the bulk of the information. And then you have Regulation A, right, which was in July offered as an opportunity for any token holder to do it, which you originally could raise up to 50 million, and now you could raise up to 75 million. And 75 million is a good amount of money. There's a good amount of platforms out there that can help you with it. Darren Marble from Insurance, a friend of mine, does a great job on that effort. And that, just to wrap through here, these are some of the places around the world that are jumping on this bandwagon and have clear regulation about how to do this. United States, Canada, Bermuda, Brazil, Cayman, Bahamas, Europe, France, Estonia, Australia, Gibraltar, Switzerland, Malta, Germany. China, not so much. Stay away from China. Thailand, Malaysia, Hong Kong, Cambodia, Japan, Philippines, Singapore, South Korea, South Africa, Saudi Arabia. And this is the future. We're going to see a lot more institutional products, regulation, interoperability of security tokens, and security tokens exchange. This is my contact information. You can find me on LinkedIn, Alex Nascimento, UCLA. Happy to chat about any of this stuff if you are looking to issue a security token. Thank you so much.
Thank you so much, Alex, for joining us today. Everyone in our audience, please definitely check out Alex online and Alex's book. We'll have this live for everyone to recap, as it's a ton of great information. Alex, is there a chance maybe someone could access the presentation that you showed further, some of those slides? Yeah. Okay, cool. So if you can share that link.
I'll share I'll send the presentation to Elena, and she can share with she can make it available.
Wonderful, wonderful. And again, thank you so much, Alex, for joining us. And I apologize we had to cut it short, but tons of information. Tons of information for your audience. Again, definitely check out the presentation, as we'll share that as Alex sends it over. And then also do make sure to check out Alex's book, The STO Financial Revolution. I've already got a copy, Alex, so I'm looking forward to diving into it myself. And again, thank you for joining us. To you, our audience, thank you for tuning in to this edition and all editions of VCTV. We'll be back here tomorrow to talk more about what's happening and what's changing in Edge and the Internet of Things, two areas very close to my heart. And we've got an outstanding panel of experts and investors from around the world to tell us the latest and greatest. Thank you to Elena, to the entire LA Token team for making this happen. To you, our audience, I'm Kyle Ellicott, your host for VCTV. Everyone have a great day. Alex, talk to you soon.